our goal is to inform, educate, and advocate for our communities and our small business owners. We have been around for about 2+ years. We're almost approaching 200 paid members. So it's been an explosive growth in those last 2 years. This year, we are capping off our year with a huge expo at Tyson's Hall. We're expecting about 1,000 small business owners, entrepreneurs, and professionals. So we are actually quite busy. You can find out more information about this event and upcoming events on www.movechamber.org. We've grown so much that we are finding innovative ways to build on this business ecosystem. So the Chamber is serving small businesses. We are in the process of working on an application for a CDFI, a community development financial institution. We're also working on a workforce development center, and finally, potentially a venture studio. And this is really how we connected with today's speaker, Raazi Imam. Myself and one of the other board members, Arben Estrefi, we actually sat with Raazi and spoke to him about a month ago regarding what it would take to establish a venture studio. And he gave us some great insights, a lot of great advice, but those nuggets and gems were so great that we thought we have to share this with the broader community. And hence we decided to include him in our monthly Lunch and Learn series. This is our second event virtual that we have actually put together, and we're very grateful to have everyone join us today. Just so you know, we will be ending at 1:45. I have a series of questions that I have prepared for Raazi, and we will open up the floor to Q&A. What I would ask everyone to do is kindly mute themselves until they have a question, until I open it up. So just by background, Raazi Imam is a founder, and he ran his management consultant company, Sia Partners, which he did exit from recently. Phenomenal job. And then he went on to start Unlock Ventures as a founder and GP. They've done really great work investing in some great ideas. And I think more important than those great ideas are great founders. And that's the tranche of our conversation today. Before I go too much into questions, Raazi, I'd love to know a little bit more about your background that makes you a subject matter expert on who is a good founder and who's worth investing in.
Sure, Shai, thanks so much for having me. Assalamu alaikum to everybody. Let me give you my quick background on my career. So I started my career on a trading floor in New York. I worked for Invesco, or a subsidiary of Invesco, and then I moved into management. I didn't like that very much, so I ended up moving into management consulting. I spent most of my career in management consulting. I started investing as an angel. Actually, let me take a step back. I spent most of my career in management consulting. I worked at the big firms earlier in my career. In 2004, I left, started my own firm called Cayman Consulting. We got acquired by Sia Partners. I finished up an earnout with Sia, but most of my career has been in management consulting. In between all that, I'm a big car guy. I had an exotic car rental business. We sold to Hertz. And I've been an angel investor for about 15, almost 20 years now, 18, 19 years now of my life, and made about 35 investments as an angel. In 2017, a couple friends and I decided, hey, let's do this properly and let's start a venture fund. So we've raised about $100 million across 2 funds. It's called Unlock Ventures. We've made about 47 investments through the fund. The fund is focused predominantly on pre-seed, seed stage companies. We usually write checks between $500,000 and $1.5 million, and we take about a 10% equity position. And I think, Shahid, to your point, a lot of funds have a vertical that they're focused on, right? It could be something in tech or fintech, and we are much more focused on founder-driven funds. And so we really focus very exclusively on, of course, we want to know about the technology or the product or the vertical, but we really care about the founder and the founding team and what they bring to the table in terms of the product or technology that they're building. Shahid, do you want me to get into a little bit more about some of the characteristics of founders we look for?
Let me quickly jump in, Raazi.
Sure.
Right before the call started, you and I talked about I guess the difference between angel founders and venture founders and your approach. Do you want to elaborate a little bit on that
Yeah,
first?
sure. Yeah, there are these sort of terms that are used all the time, and angel really refers to individual people that are making some sort of an investment in a company, a startup or some company. Typically, angels don't hold board seats or board advisor seats or board observer seats. Typically, they make a smaller investment, and it's usually, you know, a person or maybe a group of friends that are doing it, as opposed to venture capital, which is an entire investment class separate from like private equity and other investment classes, where in venture capital, most of the investments are made very early, and it's a little bit more of a structured process. So people invest at a pre-seed stage, at a seed stage, at an A stage, at a B stage, and those stages are defined by maturity of the company, sometimes also an investment round of money, of capital. Could be debt, could be other types of capital. And there's a lot more rigor behind those investments because a venture fund raises money through investors and they pool that money together and then they make those investments. Those fund managers or those general partners, we call them, make those investments. So you can imagine I'm not just investing my own money, which I am, but I'm also investing many other people's money into these startups. So the bar is significantly higher in terms of due diligence. The process that we use to evaluate the companies and the people and the space is a little bit more rigorous than what I would do as an angel, where I might really like somebody and I really like their product or their service, and I might just write a check for it. And typically, when we invest as a venture fund, we're also taking a much more active role because we have a much higher level of ownership in that company, right? It could be 5%, 10%, 15% of the company that we're owning. So we might take a board seat or a board observer seat, et cetera. So that's the big difference. Is angels, much lower bar, usually smaller checks, usually not as much, we'll say, influence or control in the company. In the venture side, right, we're writing bigger checks, a much higher level of due diligence because we're investing other people's money, not just our own. And we're usually taking a little bit more of a influential position in the company and its future.
So would you say that you're paying a little bit more attention to the founders from the venture side, and what types of characteristics are you looking at from the founders? And really, not only what are you looking for in terms of, hey, these are success metrics that are more likely to have us have an exit, and then what are some red flags that you might see and say, hey, I don't want to have anything to do with this, and I'll pass.
Yeah, I'll try to answer your question. I'll sort of touch the high points because we could spend hours talking about the characteristics of founding teams and founders that we look for. But maybe a couple important things that we consider, Shahid, is we care about their depth in the space that they're building the company, right? So if you're a founder in a tech company, how much depth do you have in that space within that vertical? So let's say you're a founder in an e-commerce platform. Well, how much e-commerce work have you done? Have you worked at bigger e-commerce companies? Have you built other e-commerce products? So depth in a space is very important for us. There's inherent characteristics in those founders we look for, things like you'll hear about grit and resilience and these things. But I think what we're really looking for are people that have a level of curiosity that's abnormally high. Curious people typically have a different mindset than other people. And so they are learning quickly, they're adjusting and changing their position on things quickly. They're able to resolve conflicts and problems and issues in the market quickly. They can adapt to the changes in the market as well. A new competitor comes in, somebody that has that level of curiosity can adjust how they think about the business, the features and functionalities of what they're building, et cetera. So that's really important to us. The grit, resilience is very important. Being a founder or being in an early stage company is very difficult. It's not just difficult on the person, it's difficult on their family, it's difficult on their friends, typically long hours, high stress. Can I make payroll? Can I bring on a team? So that's really important to us, that we understand do they have that personality, that ability to bounce back from adversity and issues, and can they keep pushing forward? I think the other thing that we look for quite a bit also is their financial acumen, right? So we're investing sometimes large amounts of money, and sometimes we're going with other institutional investors as well. Have they managed a P&L? Do they understand what a balance sheet looks like? Can they make people decisions, hiring and letting go of people decisions quickly and efficiently? Do they know when to spend more, when to pull back on the spend based on market dynamics, where the product is, et cetera? So somebody that really can orchestrate and run a business. And the focus is always to at least at a minimum break even, if not actually, make a profit. A lot of companies in the venture space, because they're venture backed, are in the red. They're not making money. People are, companies or institutions are investing and investing with the hope that they're going to be cash flow positive or make money. But for us, does the founder and the founding team have the mentality that we have to be able to run a viable, profitable business as quickly as possible? So those are some of the important things, Shahid, that we look at. Red flags. You want me to talk about red flags for a moment?
Yeah, go ahead.
Okay. Red flags, in general, and this isn't across the board, but we shy away from founders and teams that are doing it part-time. Not to say there aren't some brilliant people that can start a business and keep a full-time job and a part-time job, but we do shy away from that because we like people that are all in, right? I believe in this product or this technology or this whatever it is that they're building, and I'm all in, and I'm going to invest all my time and resources into that. So I wouldn't say it's a red flag, but it's a yellow flag for us if people are not all in on what they're believing in, what their dreams are. People that have not managed other people and teams is a bit of a yellow flag for us, because again, when you're starting a company and maybe it's you and one other person, but how quickly can you recruit and retain top talent? Because it is the people, especially at the early days, the first 5 to 10 people are critical to the success of that business. So are you able to recruit and retain people? Are you able to sell your story, sell the dream to other people? And then are you able to keep them on the team? Are you able to incentivize them? Are you able to work collaboratively with them? Are you transparent, open, honest? Are you a good leader? So people haven't done that. That's a problem for us. Where they have taken money matters as well for us, especially in the early days. Are you taking it from, are you taking debt? Are you taking hard money loans? Understanding sort of where they have taken money from is important. We look at their capitalization table, their cap table. We want to understand who else is on it and what the impact is. Sometimes we find that those things are enough of an issue that we may not make the investment.
Can I ask 2 questions? So the first question I have that immediately comes to mind is, I might have a really sharp idea. I've understood a gap in healthcare space, but the first challenge you mentioned was market depth. I have no background in healthcare, but I'm very good at maybe running a business. I have a team of 100 people, and this is a great market idea. How would I fill that gap?
I'm sorry, if I understand your question, are you saying you don't have a lot of depth in a space like healthcare?
Exactly. But I might have a great idea to fix an insurance
Yeah.
problem.
Yeah.
I might have business acumen. I might have started a company before, exited.
Yep.
What do I do here?
Yeah. So I would say there are a couple of things that we would look for. One, have you gone and shared that idea with people that are experts in that industry? And if so, who are they? Right? Have you gone and vetted that idea? Have you gone and spoken to executives or people that have a great depth in that healthcare space, or even within healthcare, that area that you think there's a need in? And what have they responded? Have you done some market research to understand what other companies are also trying to do the same thing that you are focused on doing? And if so, what sort of success or failures have they had? So a lot of the upfront work in terms of, I would say, research and analysis is almost more important than the company that the person starts. And when we do our due diligence, we're basically doing that in the beginning. We're understanding the space, the market, who the players are. We'll bring our own experts to the table and evaluate that company and the reason for why that company was started ourselves, and then compare it to the individual that you're referring to, Shahid, and see if it makes sense to us the same way it made sense to them. So that's usually the first step. And You could be a brilliant person, and if you have the right network of people and you have the ability to bring people together and run and manage that business, or at least bring the people together, help them get funded, and then stay out of their way so they can grow that business, that's okay too. We're open to that. But the level of research and depth that that person has gone into is important. And then the secondary thing is lots of people, I'm sure every single person on this call has had a brilliant idea, right? But executing against that brilliant idea, bringing it to life is where the challenge is. And that's where amazing companies are built, is when you can take that idea and bring it to life. And that's much harder to do than just coming up with great ideas.
Yeah, I mean, ideas are a dime a dozen.
Right.
Operations and execution is a different story.
That's right.
So I'd love to get a thought from you, from your personal experience in the startup ecosystem. How have you applied this to some of the businesses that you guys have decided to invest in or not invest in? Like, hey, I've seen a great idea, but we decided to go in a different direction, or the other way around.
Yeah, so within Unlock, we actually have an incubator that sits in Taiwan. And what we do is, just like you're saying, Shad, lots of people come up with lots of ideas, and sometimes they come to us and say, hey, we have this great idea. And what we'll do is we'll actually put some engineering talent against that, sometimes some marketing people with our team in Taiwan, and actually go build something and then go test it. And if we like it and we think there is an opportunity for this to be something more real, then we will invest into it through the fund ourselves. So imagine it's our own company that we're incubating, and we're testing, and if we like it, we'll invest into it through our fund, and we may bring other people to the table to invest in it with us. If we don't like it, well, then that's where it stops. We try to usually learn from what we've done or what the product was that we built or the prototype that we built and why it didn't work, and then move forward from there. So I think it's a good example of sort of how we approach that.
Okay. Anything on specifics? Hey, this was a really the idea is subpar, but I really believe in this leadership team. I really believe in this founding team. I think we can get somewhere with this. I mean, we've seen it on Shark Tank all the time where the idea might be subpar, but they talk about it with so much passion, they end up getting an investment. Any of that in your space? Or is that just made for TV?
Side note, I think Shark Tank, there are some interesting companies on Shark Tank. But man, those guys are sharks. Like the deal structures that they put out there and the amount of money, the amount of equity they take for the checks that they write is atrocious. And if you actually follow up with like what, Mark Cuban and some of these guys do, there are a few companies that are successful, obviously, because these guys are very successful entrepreneurs themselves, but a lot of them never make it because they're also really busy guys and they don't have the time and effort to put against it. We looked at a company recently that was in the e-commerce space. This is a good example, right? And a niche in the e-commerce space. And they had built a little prototype and they were out there already making some money, and they were able to get a certain segment of the population to transact on their platform. But what we found, and it's a good example, is they're already cash flow positive. What we found is that we didn't think the space that they were in was big enough, and their idea and the products that they were selling was very, very niche. And we didn't think there was enough there for it to become a billion-dollar business. And for us on the venture side, that's the bar: is this going to be a billion-dollar valuation business or not? And now sometimes they don't hit there, but they might get to 750 million. They might get to 500 million. They might get to 300 million. But the bar is this a billion-dollar business that these people are building? And sometimes whatever they're building is not quite broad enough. It doesn't have enough of a audience, or we call it a TAM, right? A market size that it would work. Or they don't have a plan for how they can add new customers and new segments of the market to their platform or their product, which itself is also a problem for us. So we do see these kind of companies from time to time that are very interesting, shiny, right? Especially consumer companies are always really shiny, but consumers are also a very fickle segment of the market.
Thank you. So at this moment, let me open it up to some questions. I'll pause for a second. I know I have a ton of questions that I'd like to ask, but if there's anyone here who'd like to drop something in the chat, we can either go ahead and call on you, or we can, yeah, go ahead, Abdul. Let me.
Hey, Raazi. Let me know if you guys can hear me.
Yep.
Perfect. Well, thank you so much, first of all, for sharing your thoughts. So I have kind of a two-sided question. One's personal, one is professional. So professionally, I am a co-founder slash COO of a pre-seed, pre-revenue startup. We're working in the EV SaaS space. If we were interested in pitching to your VC, kind of what would those steps look like? What is that process? And yeah, how do we kind of get you to engage with us? And then part two, which is a more personal question, is so my background is strategy and ops. I've been in late stage startups doing growth strategy, biz ops. I've advised pre-seed companies in the past, mainly in the health tech and climate tech space. I feel like I am interested in a career now where I'm switching from being an operator to moving into the venture capital space. What thoughts, ideas do you have? Because I feel like there are some different platforms. You could be a fellow, you could be a scout. What are some steps that you recommend? So I guess those two questions, if you can tackle those.
Raazi, but can I just interject 1 second? So for the first question, if you could just broaden it a little bit more. So basically for an entrepreneur, what do they need to do to be ready to pitch to you guys? Not necessarily just Abdul in terms of pitch, what would it take to improve those chances of getting an investment for you? I think that would be really helpful. And then second question is, it's a great question, Abdul.
Sure. I think I found three questions in there, so I'm going to try to cover all three. So one, if you're interested in Unlock specifically, if you go to unlockvp.com, there's a form you can fill out that allows you to put all your company information, attach a deck, and that will go through the process, and we can evaluate it and look at it. For us, part of our thesis, which limits the amount of companies we look at, is we only invest in companies that are located in Seattle, San Francisco, or LA today. And the reason is those markets, specifically Seattle and LA, are markets where we feel like we have an unfair advantage because of our access to the academic community, to the startup community, to entrepreneurs, and that whole ecosystem. So in other words, we see better deals than other funds do. And so when we get to see them first many times, and so we would like to invest there. San Francisco, we usually use more for networking with later stage funds. So if we have a pre-seed or seed stage fund and there's an A stage fund that I want to build a relationship so I can give my company a soft handoff to an A stage investor, we spend more time, but there are 700, 800 seed stage funds in San Francisco. So I like to say, if I'm seeing a deal in San Francisco, something is terribly wrong because the other 700 or 800 startup seed stage companies should have been seeing those deals before I do. But Seattle and LA, we have some unfair advantages there, I'd like to say. So that's sort of the Unlock thing. I think to answer your question, Shahid, about the pitch is pretty important, but I think even before the pitch, it's one, understanding the space that you're in, understanding what makes the individual people on that team qualified to be able to build something in that space, so their level of depth and expertise. We love serial entrepreneurs, so somebody that's built a company before and is doing it again, even if they failed, that experience is invaluable, right? And sometimes the failures have significant learnings as well. So a serial entrepreneur for us is something that's important. I think other characteristics that I think are helpful is practice. I mean, it's as simple as standing in front of a mirror, going to family and friends and practicing the pitch, right? Because one thing I can tell you is venture guys have a lot of ADD because we see so many deals. And depending on how much my stomach hurts that morning, how much my kids have been yelling and screaming, my patience level sometimes is low, right or wrong. And so, how quickly can you get my attention? How far along are you? What we're finding right now is that the markets are very unforgiving. So if somebody has an idea and they put it into a PowerPoint or a keynote, that's usually not enough unless you have incredible pedigree and incredible company to get any funding. However, if you've started a company 2 years ago, you've built a business, you have a product, you've started to get some revenue, we're much more interested in understanding where you're at in your journey, if we can help you to the next level of that journey. So unless you're, for us, I can tell you, like, you're coming out of a Google, you're a founding engineer at Google or Meta or Microsoft, or you have people on your team that have that type of pedigree and talent, or you've been a serial entrepreneur and you've, built a couple companies, the bar it seems to be getting higher and higher in terms of where we'll invest and where we won't. So I'm not trying to discourage anybody. I'm just being realistic.
Thank you,
Abdul, I
Raazi.
think Abdul, I think your last question was.
It was, yeah, so it was a more professional development question of like, I have someone who's in strategy and ops. Yeah. So like, how does someone like me who has been an operator in late stage, early stage transition to a career in venture capital? Is it MBA? Is it fellowships? Is it BCU? Is it shadowing? Like, what does that process look like?
Yeah, venture companies are an interesting business, right? Because you don't need a lot of people to run a venture fund. You can run a $150 million, $200 million venture fund with 5 people. So the number of seats available to be part of a fund are very small and few. So definitely an MBA helps. Definitely being a venture partner or being a scout affiliated to a bigger fund is helpful. Being an entrepreneur is another path. There's a bunch of different paths, I would say, to get into venture. Like for myself and the other 2 folks, our journey was we both had built and sold 2 startups, right? 2 companies. And so we had enough experience between the 3 of us, 6 different companies that we'd been a part of. And then combined, we had done about 150 deals together as angels. So we had made 150 investments. We had about a 42% internal rate of return on those exited investments. And that gave us enough credibility to start. And it was still very hard for us to raise our first fund and then raise our second fund, et cetera. So everybody's kind of taken a different path. There are a lot of entrepreneurs, Abdul, that will go through the entrepreneur path, have an exit and go join a venture fund. There are people that are entrepreneurs really deep down at their core, and they're affiliated to a venture fund. They're either a scout or they're a venture partner, or maybe they're an advisor, and over time they can join. They could be coming out of big, deep industry experience like strategy and ops or whatever your experience is. And then you could potentially affiliate with a fund. The other easiest way is you just invest in a fund. Now, funds are hard to invest in because it's not open to everybody, but some funds will take an investment, and when they take your money, then you also get a seat at the table too, potentially as an advisor or as a venture partner, et cetera. So a number of paths. Coming out of school, it's very, very competitive. I'd say it's probably the most competitive space to get into because, again, you have these giant funds and you don't need to have a huge group of people to manage a fund. You can manage a fund, you can manage a $500 million, $1 billion fund with 15 people, which limits the number of seats available to manage the fund and the number of people you need. So lots of paths, lots of ways to get into working with or being part of a fund.
Thank you, Raazi. So I think a couple of questions. Zach, are you there?
Yes, I am here. Assalamu alaikum, Raazi. Thank you for being on the call. So I worked in the kind of corporate development and strategy space and saw a lot of businesses. And then also through Move, I've had some other business owners. And a key challenge that seems to happen is scaling a business. Founders, once you've kind of got product market fit, they've got some revenue, but then to get into that big leagues of scaling, especially if it's a software business, they either have to get very much customizable. Quite often, they don't have the money to kind of scale. And so they have to take some risks. And quite often this involves a lot of like extra cash flow that they may not have. So from your experience, what advice would you give to entrepreneurs when they're looking to start scaling businesses? What's the best way to kind of go about it?
It's a hard question to answer. Maybe I'll try to answer it for SaaS businesses. SaaS businesses are notoriously hard to scale because typically what we find is unless you're in some absolute white space area, right? Maybe some subset of AI where the product is just so unique. You're building a piece of software that's usually touching tangentially something else that's already been built, right? Salesforce has built something, or Microsoft has built something, or some other software companies built it. And you're building sometimes a set of features that are new, but are in an existing software space. And so unless we feel like we see an opportunity where whatever that person or that team is building has the ability to scale because it's a new set of customers that they're going to take on, or it's a new way to to do something that's different and innovative, we usually stay away from those kind of SaaS type companies, because really the only exit you have is, in theory, is you build it to a certain amount. Let's say you build it to 2 million, 5 million, 10 million, and then really the outcome is an acquisition. And so your acquisition is limited to what, 5 companies that could potentially acquire you. Now, if the product is really good and there's a huge gap and you built it quickly and you've gotten a bunch of customers quickly, then perhaps one of these software companies acquires you. But SaaS businesses we find are notoriously hard. And then SaaS businesses also have plateaus. Like, you get to 50 million, there's a plateau there where it's hard to break that. You get to 150 million in revenue, there's another plateau that's hard to break. So some of it becomes also, where are you in that journey? So I'm sorry, I'm not giving you a good answer on scaling outside of, I agree with you 100%. Scaling SaaS businesses is really, really difficult to do. Unless it's, like I said, unless it's just a really innovative space, or unless we have some sort of unique access to a VP at Microsoft that manages that product line, or something like that, where we could actually connect, right, the startup, software startup to one of these big guys that really are expanding their platforms. Like, we usually stay away from them.
Perfect. Thank you.
Yeah.
Thank you, Raazi. So I just want to, before I let us get one more question in. So you talked a lot about, again, market insights. Now you just talked about scalability. Can we talk about specifics of an individual? What type of leadership style you're looking for a founder, and how much of that leadership can be taught versus how much of it is natural?
Yeah, there isn't I would say the leadership style has to be compatible to the people in the industry you're in. And I think that's probably the best way to explain it. And what I mean is, if the founder is in the manufacturing space, or we'll call it chip manufacturing space, the old stodgy industry, you don't have to be charismatic. You just have to have really good understanding of the chip manufacturing space. You have to have access to a fab. You have to have certain things in place. You don't have to be a charismatic, amazing founder. You just need to know the space, and the people you're going to work with are going to be, a different demographic than if you're sitting in Silicon Valley, you're working in a consumer startup with a bunch of 20-something-year-olds. It's a very different team that you're going to have to support. So I think it's, for us, we look at it as like, as the founder in the industry that you're in, with the culture that industry has, are you are you best in class in that space? And that matters more. Now, there are some characteristics, obviously, of founders that are important as well. Good listening. I mentioned curiosity, so that's really important. Somebody that's a good listener. Someone that knows when to micromanage, and someone that knows when to let people go and give them space. Someone that understands the different levers in a business. So understands sales, understands operations, understands business development, understands some of these functions, understands financials, or has somebody on their team that's qualified in that area. I think those are important. Yeah, I think that's probably a good start.
All right, I appreciate it. So I'm going to try to connect these two sisters' questions. So one is, again, maybe not necessarily about a founder, but about the types of investments you make. What is attractive? Is education business attractive? And I think how does it compare to land? And then what kind of businesses would get more VC funding if you stay away from SaaS? Can you provide one or two examples?
Yeah, there are definitely verticals. So we look at it from the perspective of what verticals get you the highest valuations, right? So for example, AI was going to, you have Gen AI or ML or NLP in your product, like you're going to get high valuations. So those are interesting businesses for us to look at. Now, even that space is evolving. Everybody seems to put the word AI in what they're building, but it's not necessarily, they're not using a subset of AI and how they're actually building the product. Education businesses specifically, we stay away from because they have lower valuations. Not to say they aren't powerful and important, but we see that the valuations are lower. So unless there's something extremely innovative happening in an education or an ed tech business, we usually stay away from them because we find that the valuations are lower. HR businesses are another example of a business that powerful. If you're Workday, you're doing great. But if you're trying to build an HR company or an HR platform, sentiment analysis platform, or something within a subset of HR, very hard to do. The valuations aren't great. And I'm not just saying it, but the data shows, if you look at exits, you look at outcomes of ed tech companies or HR companies, you'll find that the valuations are typically lower. So those are good. Land, I don't think I fully understood, Shahid, as in like real estate companies. Is that what the question was in terms of valuations or in terms of attractive?
Land, yeah, I guess land investments, real estate, is that attractive?
Yeah, I mean, sort of, right? It depends on are you talking about residential real estate? Are you talking about commercial real estate? What in residential are we talking about? So I think it depends on the asset class. It depends on the market or the hyper market focus of those investments. We only do investments in tech as a fund. We don't do investments. We have done investments, however, where the technology is helping enable either like a sustainability project or sustainability projects where their land is an important component of it. But we don't historically invest into land or into like residential or commercial real estate type investments or even REITs. We don't do that kind. Those are, I mean, some of the richest people in the world have giant portfolios of land investments, right? So it's to me, like the folks that I've seen do that successfully are the ones that buy land or buy property, hold on to it for decades, and that property is in the right place at the right time. Sometimes, they're also influencing the city and state, codes and zoning and all these things. Then you get these interesting outcomes. But land is not. I would not say I'm an expert in land, so I can't say too much more than that.
Raazi, thank you. This is the last question. I know you have to go. Uzi, if we could keep it to under a minute.
Yeah.
Please.
My name is not Uzi. Oh, sounds good. Yeah, my name is Usman, and quick question. So, what advice do you have for someone that coming out of college or is out of college and who want to start a VC? So I have done a lot of investment in stock market and done great. Now I want to take that next step to see what can I do within the realm of startups. I've started startups in the past where I have somewhat success, but I think my core skills are investment. I've done great with investment. So what advice do you have with that? For that?
When we, I'll tell you a little bit of our story, Usman, but like I think I mentioned, we did about 140 investments as an angel before we launched a fund. And the repeat investments, sitting on all these, either sitting as an observer or a board member, mostly observer, because we didn't have enough equity in any of these companies to have a board seat. Seeing kind of the repeatable processes gave us a little bit more insight on what to look for and what not to look for when we started a venture fund. To me, the venture fund bar is really high because it's not just my money, it's other people's money. It's someone else's imana, right? So we have to be extra careful about the investments we make, the quality of those investments, what are the outcomes we're looking for, and then providing transparency to those investors of how those investments are doing. So we have like a quarterly update where every company and every investment we make, we provide an update on to our investors. So I would say, if you feel like you have enough experience to be able to start a venture fund, which means you have to go raise money. If it's your own money, easy. But if you're going to go raise money from investors, I think that's something to keep in mind. Is you're taking other people's money. It's their hard-earned money. The bar is extremely high in terms of how you manage that. So investors have to be convinced of the fact that you are capable of managing their amount of their valuable funds in a meaningful way. So there's that bar. And then you, as the investor, have to be convinced that you can take other people's money and take that dollar and make it $6, $5, $10 over some period of time. So, so yes, if you feel like you have the experience in the space that you are talking about, that you have depth in to be able to do that, and you can look investors in the eye and say, I can give you a return of X over this period of time, then for sure, go do it. If you're using your own money, it's a good starting point. That's what we did right in the beginning. First 5-6 years that we were investing, we used our own money and showed to the investors that we ended up raising a fund with, that we could do that with our money. We had these types of processes, this type of approach. So I don't know, I didn't directly answer your question. I kind of shared more of my story, but to us, the bar is very high. And by the way, the other two GPs in our fund are not Muslim at all, right? They're, one's an Indian guy, one's a Chinese guy. So like, it's other people's money, and it's my reputation. It's our reputation in the market. And that's more important than anything else. And so I think those are things to just be aware of if you're going to raise a fund.
That makes sense a lot. I think your story is actually more of an answer that I was looking for, I would say. But now the question is, I have a lot of questions. How can I get in touch with someone who can be a mentor for me within the VC world? Like somebody like you, I would say. This is something I'm currently looking for.
Well, you can thank Shahid for connecting us, and feel free to reach out to me afterwards, and I'm happy to at least speak to you. And if I can help, I'm happy to help. If there's other people I can connect you with, inshallah. There's quite a thriving community on the East Coast. I'm on the West Coast in San Francisco, but there's quite a thriving community of investors and venture folks on the East Coast as well. And some of the biggest funds in the world also sit on the East Coast. NICA and the fintech space and other funds are out there. So there's a lot of people, doing this. And that you can thank Shahid for finding ways to connect to folks.
Well, thank you. I'll reach out to you. Yeah, thank you.
All right, everyone. Really thank you all for joining. Raazi, I really appreciate you taking time. I know you have a flight that you have to run to. Can people find you on LinkedIn? Yeah,
please. Raazi, Raazi Imam. Feel free to connect with me. And admittedly, I'm a little slow to respond, but inshallah, I do try to get back to folks.
Thank you, everybody. Thank you for joining us. Hopefully this was insightful and this is part of a series. We'll have additional investor lunch and learns over the next few months. See you all very soon.
Yeah. Thank you,
bye-bye.
Thank you, Shahid and team as well for inviting me to the event.
My pleasure. Assalamu alaikum.
Wa alaikum assalam.